webinar that shed a light on one of our Singularity sectors, new energy. Let's give our viewers a brief summary. What really powers the energy transition?
For our new energy sector, we look beyond the obvious beneficiaries of the energy transition, such as wind and solar and electric vehicles, but we really look at the entire value chain of new energy systems. And in particular, we want to find out which enabling technologies are powering the transition to a more sustainable energy system. We see it really as a confluence of technologies that are changing the way that energy is created, how it is stored, how it is distributed, and also monitored. For us, the new energy system comprises a number of enabling technologies such as sensors and software, artificial intelligence and data, but also advanced materials and manufacturing techniques, and also energy storage and infrastructure.
Can you please name a few examples of leading companies from the Singularity universe in this area?
Starting with energy efficiency, we have a company called Belimo, which is a Swiss company that is a leading firm in the area of heating, ventilation, and air conditioning. And what they basically provide is a tool set of actuators, of sensors and meters to optimize the airflow and the climate in a building. Buildings are essentially the biggest CO2 emitters. It's really important to make buildings more efficient, and Belimo is front and center here. Another interesting firm with respect to energy storage and infrastructure is a company called SolarEdge, which is Israeli-based. They really have a broad portfolio of smart energy solutions, from inverters for solar panels to optimizers, and from battery charging stations to storage infrastructure, and also to cloud-based software platforms that allow to optimize the energy flow in a building or for the industry. VAT Group is another company in our portfolio which is the market leader for vacuum valves. Vacuum valves, as we've alluded to before, are not just instrumental in producing semiconductor chips of the most complex sort that are getting smaller and smaller, which means that the manufacturing steps required under vacuum increase exponentially. This is also true to produce solar panels that are more advanced, and it is also true for battery manufacturing, where you need manufacturing and process steps that have to occur under controlled atmospheric conditions under vacuum. And VAT Group is really providing these valves that are instrumental to produce the picks and shovels, if you will, of parts of the energy transition. STEM is another interesting company that enables its customers to optimize the flow of energy and also the interaction with the grid by coordinating renewable energy sourcing and storing and distribution and consumption. And they do this with the help of artificial intelligence, which significantly increases efficiency and reduces costs.
The stock market had a rocky start into 2022. What's our take and outlook on it?
Indeed, markets have been on a rocky ride, and they've corrected quite significantly. And a lot of investors have been waiting for a correction after this very strong run-up, and well, here we are. Now, with respect to Fed hikes, the market is already pricing very aggressive interest rate hikes to combat inflation. We could imagine that towards the second half of the year, these inflation numbers could normalize, because we have to realize that the last 2 years during the pandemic were very unusual. And comparing year over year numbers based on very unusual base levels can also be quite tricky. And so there's been a massive overconsumption of consumer goods, of electric goods. Everyone's been ordering online. We look at the trends, this is way above trend, and the expectation is that this will come down, and it will also alleviate certain problems that we have or that remain in the supply chain. Furthermore, the equity risk premium is still attractive, especially compared to alternative investments such as fixed income. So there still aren't very many alternatives to equities. And we think that earnings will continue to drive equities higher from here, while we've seen a repricing in terms of the valuation levels. And now we are in the midst of the current earnings season, and just looking at our portfolio, things are shaping up quite positively. Year over year earnings growth for our portfolio so far is 65%. And this is with a third of the company having reported so far. And revenue growth year over year is running close to 30%. So fundamentals are still strong, and equities, and in particular our portfolio of innovation companies, we believe will still be able to perform going forward.